Okay, so welcome to the second panel discussion, everyone. This will be on trading on DEX versus trading on CEX. What's the risks? What's the difference? And I think it's good if we all start with a very short introduction, right? So I'll start and then go left to right. So my name is Jasper Stolt. I represent DeFi Plaza. DeFi Plaza being the cheapest exchange on Ethereum. So it's the actual DEX on Ethereum. Please.
Hi. Hello. Yes, my name is Andrew. I represent .com. We are a public DEX built on ZK technology. Currently we're deployed on layer 1. So DYDX actually is decentralized. We are in orders decentralized. So on top of that, we have two very interesting features. We have decentralized grid trading and also permissionless listing. So testnet is currently live, so we welcome everybody to go onto our testnet and create it.
My name is Vadim. I'm co-founder of Zerion. We're building a leading DeFi portfolio tracking and NFT tracking tool available on mobile. We've been in the space since 2018, and since then we developed quite a lot of tools on mobile to allow users to trade on all DEXs. Soon we are releasing the wallets. Hope you enjoy our product, and most likely we'll find some idle assets sitting on random protocols in DeFi that you forgot about.
Hey guys, Josh from the DYDX Foundation here. Joined about 7 months ago. We are an insurance exchange there too. Big things in the pipe for us, just released an iOS beta, and we'll be fully decentralized by the end of this year. So super exciting times for us.
Hi, Sebastien from Nervos Network. We're a blockchain, layer 1 and layer 2. Layer 1 is UTXO proof of work, and layer 2 are EVM compatible. We run them as side chains. Been active in the space for around 3 years. Our blockchain is built by ex-core researchers and developers from the Ethereum Foundation who are focused on sharding and left to build their own blockchain.
Alright, I am Michael van Poppen. I'm the CEO of 8 Global, which is an investment platform and consultancy based in Amsterdam. You might know me from social media, which is Crypto Michael. We're based in Amsterdam and I was at the wrong location, so that's why I'm sweating like crazy. I'm more or less focused on the trading and investing side of the markets. I'm not really on building something, but more on the analyst side.
All right, thank you for that. Maybe just to get into it, right? A very easy question. We'll go the other way around, right? Let's say the last year, right? How many trades have you personally done, if you're willing to share, on a DEX versus on a CEX?
Honestly, if I trade, like literally trading only, then it's on a CEX. Because what options you have on those platforms, but if I want to stake, etc., I have to do a trade on the DEX. So my purpose for staking and farming is all on the DEX, and actually trading is on the centralized exchange.
All right.
Yeah, it's the same thing here. Obviously, like your first stop when you transfer money from your bank account, let's say, online, is going to be on a centralized exchange. So there'll be like some core assets that you might be holding there, and then moving these on-chain, and then in terms of trades on-chain, for staking, probably triple digits, I guess, or no, 4 digits. Yeah.
Yep.
I would say for me, like very similar. Started off like I was just like buying one centralized exchanges, got a little bit more in DeFi in the last like year and a half. But I don't know, it's always the issue. Wish I had like more time and more resources. This is the issue for like every North American in the room that was crippling student debt, you know.
So for me it was Texas mostly. It's around 40 trades per year. But on Texas you get all liquidity and all tokens sooner, and on centralized exchanges it was more fun to trade on Texas.
Similar to them, I think I have a rather funny story to share, because I would consider myself in this space for a year and a half. I think as I started trading on Binance and CEXs, but then I remember a very funny story in which there was once I tried to withdraw my funds, then Binance paused all withdrawals. So ever since that incident, I stay away from CEX, so I'm fully on Texas right now.
Yeah, so Minecons really made an impact. So, I mean, even before that, many people, of course. So thanks for that, guys. So quite interesting. I think we have on this half we have Team DEX, right? And on that half we have Team CEX, right? So we do have a bit of a discussion. I was a little bit afraid on the How to DEX conference that everyone was going to be on the same team, right? So now we have people who are majority trading on centralized exchanges and people who are majority trading on decentralized exchanges. So we can explore why that is, right? So in the very first presentation at the opening, we learned that last year we had roughly 1 trillion in volume on decentralized exchanges versus 14 trillion, with a bit of a question mark, how much of that is wash trading, how much of that is actual real versus, not so real volume on centralized exchanges. And my first question would be to, let's say, Team Centralized Exchange, right? Do you expect to maintain that gap or that lead? Yeah?
I wouldn't say, I don't know, I wouldn't say that necessarily Team Centralized Exchange. I think that you have to think a lot about, so I was thinking, listening to the conversations that we were having earlier today, and how it was very focused on, so when we had the panel with Winage, for instance, and we're very much focused on intensely on the trading side that you can get on a decentralized exchange. But ultimately, we have to think about things like user experience as well. And what's going to drive larger adoption for crypto. And most of these people are going to come in on centralized exchanges at the beginning, and they're going to maybe feel more comfortable there. You mentioned that you started at Binance like Binance Academy, things like this, which help educate people. So I think that centralized exchanges will kind of always be the first stop that the retail user makes. So I would expect it to stay in the lead, but then ultimately as DeFi user experiences on DEX has become a little bit more user-friendly, because you're still at a stage now where it's not that difficult, but you have to want to learn. You have to want to take the time to learn and potentially make a mistake or two. I mean, I think everybody who's interacted with a DeFi protocol has done this, so I would assume that, yeah, in the long run.
So would you say that the user interface is the biggest challenge for decentralized exchanges to grow?
I think it's part of it, yeah. It's definitely fun. I mean, there's plenty of things that we can talk about, and it depends where you think the real value is long term, whether it's more on the institutional side, so traditional financial institutions that want to trade and basically make money in DeFi, because there's definitely a market for that. And we're talking about the new pool and front running. I think this morning those are for very experienced traders, right? But I think what collectively everybody who's in Amsterdam here this week is working towards is mass adoption of crypto and blockchain technology, and yeah, you have to make things easy for people. And I can't remember who was making the comment, but that ultimately, in 5 years' time, people will be interacting with crypto or blockchain, but they won't necessarily know what they're interacting with. It's just the front user experience that will matter, and yeah, I think that's what we're working towards.
Any responses to that?
I can echo Sebastian's thoughts, because I think it depends on what kind of users we're looking at. The first touch point for any crypto user, from native and non-native people, is often the centralized exchange. And some people will value the security and want to play on the centralized exchange, but some people, they're too lazy about their own habits, and they are happy with a 10% API on centralized exchange. So I would think they serve different users. And as the user educate themselves for DeFi protocol, and as they get themselves more knowledgeable on the DeFi space, they may change and swap the habits from centralized to decentralized. And some people may try DeFi and they realize that it's not for them. They prefer to stay in centralized exchange, and that's okay too. But I guess to your question, in the future there will be, in my opinion, there will be a closer gap on the trading volumes between CEX and DEX.
I can jump in there too. I think like another hurdle for DYDX especially is just like with perps, because like there's two barriers there, right? You're going sex to DEX and then you're going spot to perpetuals, which is like, I think it's a different animal. I think on the retail side, like we struggle a lot with like stickiness of users, because like you see people come in, they try it, they get liquidated. It's tough, but I think like it's really going to take like user education, and like this is just going to take time.
Yeah, we learned today also that 90% doesn't even change the default settings, right? So I mean, stickiness and getting people on board.
Like one thing is good, sorry to interrupt, but like last year when FTX and then Binance reduced the amount of leverage that people could take, so you could be at like 125x before, which for like a retail user is just, I mean, it's stupid, you know. They're like, it'll work once, but like ultimately they're going to lose their cash, and if it's some of their savings or something, it's just not good. And so they took the steps to have much more investor protection, and I think like those things are crucial in the long term, in the long run to make people more comfortable with trading on centralized or decentralized exchange as well, but in this case, a centralized exchange. You don't want people just like to lose their money once, and you want your customer to come back.
Yeah. Leverage is one hell of a drug.
Yeah, and on centralized exchanges, previously was the only way to get into crypto. Now with fiat on-ramps and off-ramps, so they can be embedded essentially into any app. So it will be easier and easier for users to jump straight to a custodial, same custodial wallet and start interacting with DeFi. But most likely they will not even notice that there is something with blockchain going under the hood.
Yeah.
I think also like maybe something we haven't touched on is like the undelivered promise of like decentralization and DeFi is that like it's gonna be a lot more responsive in a few years, like once these decentralized protocols like figure out governance and figure out how to be more responsive to token holder needs. So I think that's gonna be a huge unlock. Like once communities figure out kind of like how to operate and how to actually like exercise control of the parameters they have control over.
Yeah. So I mean, the space is really still nascent. You can see that there's a lot of maturing still to be done, but it's also going really quickly. Maybe for you, Josh, I understand you have a legal background, right? So as the only one in this panel, I believe, with a legal background, I'll put this to you first, right? But there's a lot happening also on regulation of cryptocurrency in general, but exchanges in particular. Right? So could you share your views on the specific risks and opportunities that are rising from that?
I think DeFi presents a great opportunity for people who otherwise don't have access. Like with Binance freezing assets today is a good example. DYDX specifically, like we geofence for US users just because like we don't want to end up on the wrong side of like the regulators, purely from like a risk mitigation perspective. But I think in terms of like one of like the risks with DEXs and DAOs is that like you have these entities functioning, people interacting with the DAO that are only thinking about like potential legal implications for moving forward, which not to like show our own protocol, but we found like a pretty interesting solution for this. So for like we have a grants program and an 8% multi-sig that like distributes funds, and we actually found a way to like wrap it in a trust. Unlocks a few like really interesting things in terms of limited liability for all the trustees, taxation. There's no taxation at the entity level, and the trust doesn't have to register with any like centralized authorities. So I think there's still like lots of opportunity for legal innovations and some DeFi.
And risk-wise, you mentioned geofencing.
Yeah.
So particularly for US customers,
Yeah.
that's not going away. You being a US.
I'm Canadian, yeah.
Canadian, right?
I'm actually based in Switzerland. Yeah, so I think we're like our plan, our roadmap is we'll be fully open source, fully decentralized by next year. At that point, DYDX trading, which is like, if you want to consider the sister entity of the foundation, will no longer be taking like a centralized fee. At that point, we're going to kind of reevaluate whether it makes sense to go into these markets where there's, I guess like large legal risks with the securities authorities. But yeah, for now we'll kind of stay away.
Yeah, I mean, from the user interface perspective, because of course the blockchain is the blockchain.
Yeah,
It doesn't geofence. Right?
yeah.
Uh,
I guess like or like trading.
yeah, interesting. And any other? So do you how do you advise your clients on, let's say, the legal perspective?
Well, we advise them on trades, not on legal stuff, but I guess the whole topic here comes down to like the technology itself will develop itself exponentially, so the regulation will always walk behind. So the solutions for that case will always be coming from the space itself, which we already see with Bitcoin. So in the end, yeah, I mean this legal stuff we don't advise them. It's more on the trading side, but I guess you have more information or more intel on this stuff. I'm good at some other topics.
Okay.
I think that ultimately, like, I mean, so we're 5 people here. We're all in the same space, but we focus on different things. But at the end of the day, what matters the most for us, and for I think everybody else in this room, is you just want like more users. You want more people to be in the space, and you know, you want, if we're talking about DEXs and CEXs, you want more TVL, right? You just want more money going into that space. And in order to do that, like, there's already a very large amount that's in this space, but it's peanuts compared to what it could be. We're in a situation right now where the layman is still a little bit confusing for them. It's a gray zone legally in different countries, and ultimately, like, just pushing to that wider adoption, you need governments to be more friendly, and if having some sort of regulation or some regulatory framework as part of that conversation, I think it's a necessary step to get wider adoption. You can avoid it.
So what's missing right now is that maybe during next big phase of adoption there will be identity piece embedded into the wallet, and this will provide drastically greater experience for users in terms of like how they interact with apps, and it will be much easier for apps and the regulators to identify those users because they will have trace on chain, and this might be a good ground to settle on with the regulators, since we have a chain profile and you can understand much more about users. So now you can essentially like allow them to do whatever they want because you already see what they're doing.
Yeah.
Yeah, we are fairly new project, so I think on the legal side, DEX is doing a fantastic job. I think we do our best to mirror them and on the legal side and the risk side too. But for us, at least in our own country, we do have good connection with our centralized exchange in our own country. And I think word on the ground is that a lot of these regulations also have some interest in protecting their banks. So there's a lot of things going on, and anything can happen, but we definitely would like to follow the regulations once there's a proper framework.
So maybe bringing it back to decentralized versus centralized. What do you think is the biggest opportunity for the decentralized exchanges? Sebastian.
At the moment, like for people making the choice at the moment, or like the opportunity you mean in the next.
Well, so as a decentralized exchange, as a domain or as a platform, as a community, let me say.
Yeah, I mean, first of all, the funds are yours. You control them. I think that's super important. The flexibility that you have to, you know, move around and interact with different chains, different protocols, different dApps. The innovation right now, I mean, just have a look at the people who were speaking this morning, is being pushed really on-chain, so in DeFi protocols and DEXs. So if you're a savvy user or you're willing to get your hands dirty, then like the alpha is clearly DEXs and any DeFi protocols there. For sure.
All right, Andrew?
I think for us, the two common themes for tonight is often user experience, as Sebastien mentioned, and also education. I think these two central pieces is very important to help shift the users from CEXs to DEXs, for example. I think at DGate we're often talking about product market fit. What's a product market fit? But if you really look deep into it, as the user educates itself alongside in this DeFi journey, there's different product market fit at various stage of this journey in DeFi too. So we think that, for example, we're quite big in user interview, and we interview a few non-native users into what's stopping them from using DEXs compared to centralized exchange. And one common reason I often get is that because they look at the string of numbers and which is their address, and they got so afraid about the address that what's this? And then, so ENS was a fantastic solution. I think Near Foundation did a fantastic work with the wallet. So it's little things that like this give the users a bit more confident in trying out centralized exchange. So we are still some time away, but I think with proper education, better user experience, if the user interface on DEXs look a lot like centralized exchange, they feel more comfortable, that's where the shift might come, and more people might use a DEX compared to CEX.
Yeah, going back to the panel discussion from this morning, everybody's wallet should be able to use it, right? Yeah. So maybe Vadim, to read the question, the opposite question, right? So what's the biggest risk to the DEX ecosystem developing, in your opinion?
So right now it's a lot of scam tokens and spam tokens, so user has no chance to survive in this area because it just a string of random numbers and the ticker. That's it. So they need to trust someone like Uniswap token lists to identify that this is the valid asset they are looking for. So with this risk comes the greatest opportunity for DEXs to rank assets or to how Google ranks web pages. So by viewing who holds this particular asset across like many addresses, this comes the biggest safety issue, and it's also the biggest safety issue.
Yeah, it's difficult for users to distinguish between a real token and a scam token, right? Or a real project and a scam project. Fair enough. Michael?
Well, I think it's not like scams, but I think it's the complexity that you have to use a DEX, which is making it hard for outside people to actually use a DEX. And because of all the steps you have to take to make a trade, all those steps include errors. And that's the biggest risk of a DEX. In a centralized exchange, everything is in one ecosystem, so you can just log in, make your account, do everything there. Although, if you go to Google and you type in the wrong link, you still get scammed through a phishing website. So I think that the biggest risk is the complexity of a DEX, which is also ultimately the biggest opportunity. Because if we make it more, like you were saying, more like a centralized exchange, the step would be easier. So in the end, everyone would want to use their funds themselves instead of holding it at a third party.
I think to answer your previous question as well, like one thing I forgot to mention is the biggest opportunity in DeFi or DEXs now will be the relationship that gets built to allow traditional financial institutions to truly interact with DEXs and just DeFi in general. So people like Fireblocks, for instance, that build infrastructure that allows big money to really come in and interact. So and this will obviously drive adoption because these big institutions are close to the regulators, they're closer to politicians who are helping shape the future of how regulators interact with crypto. So I think that's big. Building good infrastructure for these guys is important.
Okay, thank you. Maybe another topic that I'd like to touch before we go to questions from the audience is an observation that, let's say, about a year and a half ago, we saw that almost 99%, I believe, or somewhere thereabouts, of all the liquidity was on Ethereum. Yeah. If we look right now, we see that it's about 55 to 60, depending on what day you look at it, because it's dependent, of course, on core token prices. Is still on Ethereum. But the rest, the other 45%, is scattered across, I don't know, dozens of blockchains and L2s and competitors. And I think, personally, I think that's going to be one of the main factors in the coming years. So maybe for you, Sebastien, as developer of being involved in a project which is deploying its whole own thing.
This is actually something that that Nervos tries to solve. So the way Nervos is built, there's a big focus on interoperability and being able to scale this in a multi-chain world. And you're absolutely right. Like this is things are very much multi-chain now, and they're not going to go back. So at Nervos, what we do, for instance, is we build native bridges on our layer 1. Because the layer 1 is UTXO, we can build these bridges with UTXO chains. It's coded in Rust, so we could have it with Solana as well, for instance, but then with EVM chains. But all the smart contract activity happens on layer 2, which is EVM compatible. So, for instance, we have a stablecoin swap that's going to launch in a couple months, where it's a fork of Curve, but we'll have stablecoin pools where you'll basically be able to get the best interest rate rebalanced daily, depending on the best interest rate on a chain, right? So you're getting different APYs for your USDC on Avalanche, Phantom, and Ethereum, right? It's not, there's an arbitrage opportunity there.
So you see the scattering of liquidity as an opportunity for arbitrage rather than a challenge.
Well, liquidity is scattered across different chains, and there's an arbitrage opportunity there. But what we're trying to do is to kind of be the centralized, like very sophisticated plumbing, let's say, to help all of these liquidity pools ultimately connect and create more efficiency here. Kind of be like
maybe to be very specific, when you say interoperability, do you mean bridging of liquidity?
Bridging of liquidity. Ultimately, all of these chains end up doing or having applications that do similar things. Maybe they do them slightly faster, slightly cheaper. I think a good example was looking at Avalanche. They built an excellent bridge. I mean, there was a meme right last year when the Avalanche bridge came out, and a lot of liquidity moved from ETH to Avalanche, and it's not going back. And projects that have built natively on Avalanche have done very well. But ultimately,
it's not that much, if you look at it in the big picture.
In the big picture, it's not that much, but it's not, like you said at the beginning, it's ETH was Ethereum projects were at like 99% 18 months ago, and they lost a third of their dominance, so that is significant.
Yeah, but against 20 other blockchains. Yeah,
Sure,
so
but these blockchains eventually are going to grow. They have investors who behind them who fund incentive programs. And it's about users, right? So once users leave and they start interacting on other protocols that are maybe cheaper, that can be faster, or they can, take advantage of these incentives.
Thank you.
Yeah.
And Andrew, maybe you guys are on in ZK rollups, right? So maybe your opinion and comments towards this?
I think currently we are chain agnostic. Before that, actually, we wanted to launch on Arbitrum actually, but I think due to various reasons, we postponed that, and we actually have our own L2 and we launched on Ethereum layer 1. But definitely we are keeping an eye on the various chains and how the TVL works. But I think you guys did a fantastic job at the L2. You guys were fantastic showcase there. So it's something that interests us too. But in my opinion, I think there's just way too many chains right now.
Yeah.
Too many. It's just so fragmented. I think in a couple of years, once the incentives die off, you will see a couple of main chains, and those are the main chains in which we want to be. And that's also one of the reasons why we choose to be on Ethereum layer 1, because it's highest TVL, like you mentioned, and also in the future we think it's a more confident bet that you'll still be around given like 3 to 5 years time.
All right. So thank you. I believe we have about 5 minutes left, so maybe that would be good for some
Guys, any questions to our participants of this panel? Yes, come in.
Hi there. So you mentioned institutional adoption. I think everyone's mentioning it at the moment. How do you want to see that working? This has been one of the main things that a lot of people have been discussing. There's lots of people looking at different ways to approach it. From your perspectives, how would you want to see that, I guess, play out? What's the easiest way from your perspective?
And this is a question to
I guess the whole panel really, to be honest.
Sebastien. You
Yeah.
touched on institutions, right?
I'm happy to take a piece of it. So I actually come from a private banking background. I used to work at one of the largest private banks in Switzerland. I was in charge of the crypto asset management research there, so I got to see from their perspective what matters. And I think that there's three things that institutions are going to look for when they start to really interact on chain. They're going to want obviously things that are safe. They're going to want teams or projects where there's an actual team of people that they know. They don't want to interact with an anonymous team, and they're going to want protocols that are really scalable, right? Because when you're coming in with the size that institutions have, you don't want to be shifting the market every time you make a trade. I think roughly speaking, those are three things that are going to be really important to build up to make these guys comfortable.
And regulatory certainty.
Yeah, for sure.
So
Yeah.
that's
Goes without saying.
Any other questions, guys? No? Thank you very much. Thank you for this interesting discussion. Okay, so we are moving on and we have one speaker's replacement. So instead of Polkadot, that's unfortunate to be with us today. So we